Americans are expected to see bigger paychecks this year with the One Big Beautiful Bill Act now in effect. One analysis says that after-tax incomes will rise about 5.4% on average, and even more for middle-class Americans. The House Ways and Means Committee says that the middle class will receive a lion's share of that benefit from the tax cuts, roughly about 13% of the total, and it'll shift more of that federal income tax burden to the wealthiest Americans. All right, so David, help explain for us what was just an extension from the 2017 tax cuts that thankfully did not expire and are being extended versus what is new? Because does that impact the way we feel? Does that impact real monetary stimulus into the economy?
No, it does not. And this is a very important thing to realize. Let's just pretend there's no such thing as withholdings. All there is the taxes you owe at the end of the year. There isn't a single change in the Big Beautiful Bill Act for individual tax rates and deductions. There's certain carve-outs if you happen to work off tips and some of the deduction for seniors on Social Security. That's very, very small stuff. Otherwise, it would have had a bigger impact to deficit. The major changes for Big Beautiful Bill, the stuff that I liked, are supply side, business growth on deductibility, bonus depreciation, capital expenditures, R&D expenditures. Individually, the standard deduction is larger. It's permanent now, but it's the same as it's been from 2017 through current. The individual tax rates, they're permanent now, but they would have gone way higher. That would have been a problem. But nothing changed. So what we're talking about when people refer to some cash flow difference is only withholdings, and that to me is different than any kind of actual sustainable tax cut.
But I'm wondering, Lou, if the withholdings make a difference. For me, I was looking, I was like, oh, you're right, the SALT cap went from 10 to 40,000. That's exciting for someone like me. I don't have taxes on tips or overtime, but I know a lot of people in my building who work on that are excited for that. And so there's sort of this still perceived after-tax income increase, maybe that'll come in the wave of a refund check in April.
Yeah, I think perception matters. We talked about this before in terms of personal consumption spending keeps going up, but consumer sentiment is in the tank. People are acting differently than they feel. I think I agree with David, though. The more impactful and more meaningful changes in the taxes come on the corporate side, which is really going to drive the economy and lead to things like rising real wages, which we need, all those things that will contribute to consumers having more take-home pay, being more willing to spend it, feeling better than they are right now. But I think it's more just, I don't want to say it's window dressing, but it's just messaging, and messaging matters. We've seen the Democrats really lead the way in that. So I think this is the right thing to be driving home. You're going to have more take-home pay unless you're in that top 0.1% based upon after-tax income. But it's really what happens on the corporate side that
I mean, can I just say something? The beauty of this is we from this vantage point, we can all talk like the tax cut, the 2017 tax cuts were always going to be there for us, right?
Yes.
But of course, if we ported ourselves back to back to 2024, there was a real question about whether those tax cuts would be extended.
To 24, not in 25. Those questions went away at about 1 a.m. on election night.
They did.
Okay.
But so here we enjoy the benefit of those rates staying low. And I agree, yeah, this is a withholding change that people are going to enjoy. That's what you get in your paycheck week to week. It doesn't affect your overall, maybe, after-tax income. But I do think it's important to remember that we could be living in a world right now. We were very close to living in a world where your taxes would have gone up.
Well, now, why do you think that? You believe that the Democrats would have raised taxes on the lowest income brackets? And
They would have.
Why didn't Obama do it when he had it?
Up. Well, one, I think
he had the House and the Senate.
Yeah, he did.
Well, he didn't have the House. Excuse me. He didn't need it because it was going to automatically sunset. He didn't have the House.
I think the brand of Democrat you got right now in America.
Yeah, that may be true.
Would be very happy.
That may be true. But
they're talking about wealth taxes, David. They don't want to just tax your income. They want to tax your computer.
Well, the bottom 50% of federal income taxpayers don't pay anything.
Right.
They pay nothing. So, do they need like an additional tax cut for the bottom 50% is called welfare. No. The Democrats were going to allow, they voted for taxes to go up. That's what they voted for. They voted against the One Big Beautiful Bill. And I just want to remind people that that they voted for everyone's taxes to go up in the United States of America because they think they make better decisions with your money.
They just need more of it.
That's
all the
what
time.
kills me, is they think they're better stewards of my money than I am, and that they know what's better for my family budget than I do.
And your health.
Yes,
They think that they
too.
make better decisions.
And your education.
So,
Right.
But let's talk about businesses.
Yeah.
My dad's a small business owner, loves the S-Corp thing that's coming. We've talked on this program how we love the immediate expensing for factories, factory floors. I think the question is it coming in time for midterms? Does the supply side economics that you're so excited about filter down into higher real wages by November? Why haven't we seen more of that already this year, the way we saw a big boost in Trump's first year in 1.0?
First of all, a move from the 35% corporate rate to 21%, which is what we saw in Trump 1.0, was one of the most meaningful tax bills ever, besides the Reagan tax cuts of the 80s. So it was just much more materially significant to a far greater number of people. But the reason why, in my opinion, is that it was off against the tariffs. That the impact of tariffs on small businesses was a pull, while the push element was on the big, beautiful bill. I think it's a big story in 26. My political answer, which is not really what I'm good at talking about, is I don't think it will be a material factor in the midterms. But economically, I think it's a big question. I think people underestimate how meaningful the supply side benefits will be from big, beautiful bill, but it's up against an unknown. Is all of the data I see from the impact of tariffs for the companies that are actually paying it
Is that
is very
headwind
problematic.
subsided now that tariffs have come down from Liberation Day, have sort of filtered to the rearview mirror?
Not if you listen to businesses,
Right.
not if you read through the ISM manufacturing report and some of the
talked about that
commentary.
tonight. Yep.
Yeah, in some of the commentary that was in the ISM. So ISM for December was lower. It's still it's still contracting. We're still in a manufacturing recession. It's only manufacturing has only expanded twice since the fall of 2022. And just looking at the percentage of 85% of the sector's GDP contracted in December compared to just 58% in November. And if you read the commentary, it's costs, and they blame tariffs. All of the businesses that are quoted say that those are huge headwinds, and it's still impacting their business. And even I know your dad's business, but even people who are in transportation equipment, as just one example.
And the only sector last year to see significant wage decline in the calendar year 25, manufacturing.
I think we get more manufacturing jobs or not on Friday in the jobs report, so we'll be looking at that as well.